Great, I see that we're live, so let's get started. Hello everyone and welcome to our live stream today, Old Rails, New Rules, Reimagining Payments Infrastructure. My name is Guy Webster and I will be hosting today's live stream. I'm part of the account management team here at Marqeta, where for the past 3.5 years, I've been working with key accounts across Europe, helping them to build and scale their card programs with Marqeta. I'm delighted today to be joined by 3 expert guests, including a fellow Marquetan, Diana, from our solutions engineering team, and alongside her is Martin from Skelete and Benoit at Oakland. They will be introducing themselves very shortly, but for now, as a quick overview of what to expect over the next 50 or so minutes, we're going to be exploring a few different topics, including how companies are meeting increasingly high expectations in financial services. We'll then dive into how the infrastructure powering those experiences is currently being reimagined. And in doing that, we'll share real-world examples, insights, and ideas to help you navigate the challenges and opportunities of building payments in today's fast-changing environment. This is a live session, so please do ask as many questions as you like. We want to hear from you and don't be shy. Feel free to leave any comments, questions, and we'll do our best to address them as we go. And so with that, let's jump into introductions. And Diana, if okay with you, I'll start with you. If you could please introduce yourself and tell us a bit about you, your role, and your experience.
Yeah, I guess ladies first. So I'm really pleased to be here. My name is Diana. Like I said, I also work at Marqeta. I've been in the company for 5 years now as a solutions engineer. And what I do is basically I get to know all of our prospects, understand the use case, and then basically figure out with them how we can architect their implementation into our platform and how the use case is going to work exactly. I also work with existing customers whenever they want to do something exciting like launch a new product, new service, or just expand into a new market. And then I work very closely with our central product functions. But I'm the point of contact for any type of feature request and product feedback. So quite a varied role. And just to say a bit about myself, last 5 years in Marqeta. Before that, I was working in the acquiring world, managing the expansion into different markets. And before that, I was working at Visa in different technical and product roles for more years than I care to admit. And yeah, very nice to be with Benoit, Martin, yourself, Guy here.
Thanks, Diana. Now, Martin, over to you.
Yes, thank you very much for having me. Very happy to be there. I'm the CEO of Skelete. I've been running the company for the past 18 months and serving at the board since 2021. At Skelete, I think everybody knows what we do, but we are a next-gen core banking provider, meaning that we enable digital banks as well as payment institutions to launch or modernize their technological backbone. And as such, we partner with great companies like Marqeta, in particular for the cards payment and so on. And therefore, we have a bit of an overview in terms of what's going on in the payment space overall and some market insights that I will be happy to share. I have a background in as an investor as well in the software space related to financial services in particular across Europe and the US. I've been a banker myself, so I learned a couple of things, good or bad, on the other side of it, as a banker, as a consultant. Thanks for having me.
Thank you very much. And now, Benoit, over to you, please.
Good evening, everyone. So I'm very pleased to be with you. I'm Benoit Urbaniak, partner at Oakland Consulting. Oakland Consulting is a consultancy firm specialized in the payment area. So we have been working for more than 20 years in the payment area. So we are involved in several types of projects with our customer, especially acceptance, acquiring, issuing, fighting against fraud, and also what I call European payment initiatives. So I mean, for example, SEPA, Euro, and also open banking. So I'm going to be shorter, I think, because we have a lot of topics to discuss. So I'm very pleased to be with you.
Great, thank you. And yeah, you're right, we've got lots to cover, so let's get started. Starting with the first question, which is looking at industry challenges and trends. And we'll stay with you, Benoit, if that's okay. And I'd love to know what you see as the biggest pain points for banks and fintech still relying on legacy payment systems today.
Yes, indeed. According to me, there are three main pain points. So the first one is the lack of flexibility, because in the old system, it is very often complicated and long to add new functions because the technical stack is based on old technology. So to be clear, I mean no cloud and no API. And very often, old applications have been developed as a black box or in a monolithic architecture. And we will see later in this live stream that we can have other approaches involving a breakdown by microservices, but we are going to deep dive later on this. The second pain point, according to me, is the lack of scalability. It is also related because the old solutions are not cloud native. It means that the old systems are based on fixed physical infrastructure with a defined capacity. And so it means that if you want to increase your capacity, you had to buy new machines and configure them. It's a real project, quite long, not compatible with real-time matter. And the last point is a lot of work to be compliant with security standards, mainly PCI DSS and DORA, but of course there is other security and compliance requirements. So PCI DSS is a set of rules and guidelines designed to help organizations to process credit card data to ensure its security. And of course, these guidelines are essential to protect against data breaches and credit card fraud. And DORA regulation strengthens the digital operational resilience of financial entities to cyber threats and risk related to information and communication technology. So it improves risk management, incident detection, and control of third-party risk.
Great. Okay, thank you. And Diana, does that resonate with your experience?
Yeah, quite a lot. And I have to say, I talk on a very regular basis with customers that are dragged almost by this legacy system, and the go-to-market is definitely a pain point. So whatever they want to innovate on the product, it means that they want to go through a change request, and that involves filling in spreadsheets, and it takes time and it costs a fee. So basically, it's a bottleneck for them to innovate, to expand to other markets, like Benoit was saying. And especially what resonates with me is the data silos. That's I guess that's an important point, where most of these legacy providers, they just don't have the functionality to stream the data in real time. And so that means that the customer will get report once a day, or maybe they will just get like part of that data. And so that means that if they want to personalize their offering, if they want to have that behavioral patterns to basically improve their services, they're just losing on that opportunity. Those are the main things, real pain points I see when talking with customers coming from the more legacy providers.
Okay, great. And Martin, any experiences you want to share?
Yeah, I think, to the comments that were made by Diana and Benoit, I think what drives demand for change is mostly the emergence of new players or new business model. Both can be true. So new business models or business model expansion can come from historical players. It's not necessarily neobanks like the Revolut and the like, but it can be a bank strategic project to launch a digital bank, to launch a BaaS activity, and or to just launch new products as part of their core offering. And so I think the movement that we see in the market with regards to end consumer expectations drives the necessity to move quicker from a go-to-market standpoint with regards to product or business unit launches in particular. And then in order to do that, you are turning yourself, if you are a bank, to the historical industrial backbones that you have from a technological standpoint, which works fine to handle the huge volumes that you have in a pretty, like you have a huge warehouse related to card management or whatever that may be, which is fine. But then the moment you want to move quickly with that huge ship, it becomes an issue from a product adequacy standpoint, from a time to market standpoint, from a real-time expectation standpoint. And this is how people are trying to think a bit out of the box. Okay, we have like this huge ship, which is probably good for what we are doing at scale. But if you want to manufacture new products quickly and or innovate with new offering, we need to do something else. And this is what opens in my mind a huge terrain for players like Marqeta or ourselves, because we just enable those banks and or alternative players to launch those products at the speed they like with the right product for their end customers. That's really what I see across Europe and elsewhere.
Thank you. Okay, and I think we've slightly covered some of this already, but would be great to hear from you all on how you feel outdated card and payment infrastructures is limiting innovation and scalability for financial institutions. I'll stay with you, Martin, if there's anything further you wanted to add there.
Yes, I think the main point is really what I've just said, which is with regards to the launch of products or new activities. I think that's really in my mind where the main pain point is, because you have to get started with something. You can't really use the monolithic architecture that you have because you lack APIs, to Benoit's point. It's not real time, so it's not going to fit the front-end architecture with regards to customer expectation. And then you start really to compound thousands of Mondays and months, if not years. So very quickly, that's not an option. And so then you have another pain point, which is, okay, I can't do this, so what do I do? And you start unbundling the value chain. What does it really take to launch a card program? And then you discover that behind those huge ships that I mentioned, there is a lot of pieces. You start really like to unplug the whole machinery behind the car engine. And you discover BIN sponsorship, you discover authorization flows, you discover card lifecycle management, you discover interconnectivity, you discover compensation flows, you discovered card manufacturing processes, you discovered rejection rates, whatever that may be. And then you look at that as a CTO, a CPO, or CEO if you want to get started, and like, okay, what do I do? I never knew there was so much complexity underneath. And that's where providers come along and say, okay, let's go about abstracting that complexity away from the customers which want to launch something quickly with the right expectations. And I think the second leg regarding that point is that beyond the time to market, the customer expectations is not in line with the old ways of handling payments and cards. The do-it-yourself mode is too rare. We see customers, even today, where in order to change the authorization amount of a debit card, you need to go to a branch. So that doesn't fly. You need to be digital, you need to have self-care, and it's very hard to do that with a lot of historical monolithic systems. And therefore, it becomes also a transformation project to remain in the game.
Great, thank you. Benoit, anything to add on that topic?
Yes, I agree with Martin. What I met in France is two big trends. So the modernization of the old payment factory from the French banks. So I can give an example. It is Ethereum, for example. So the main question for decision maker is whether the work should be done by in-house development teams or whether they should buy a ready-to-use solution that just need to be configured. So of course, the choice depends on the modernity of the technological assets and the quality of the solution on the market. But of course, banks are taking advantage of the integration of a new processing platform to modernize their entire information system using API. But yes, I saw also that sometimes we have stakeholders trying to internalize issuing or acquiring processing platform. But to be honest, it's more complicated. And of course, one prerequisite is to have in-house development skills, and it's not very common. So the recommendation is rather to involve fintech and experts on this domain for processing.
Thanks. And Diana, does that sound familiar to you?
Yeah, I think both Benoit and Martin, they've really covered this, and you can see the experience and the pain through the same conversations. I guess the only thing from my side is, well, it's just not made for agile iteration, right? So the market is moving very quickly, regulation is moving quickly, and if you're dragged by a legacy provider, you're just not able to catch up. And normally they do vendor lock-in, so you have very rigid contracts that they are there for a long time, and it's quite flexible if you want to change. But then obviously there are ways to change. It will depend on the status of your banking platform, but you can obviously hollow out and go for non-differential services and give it to a modern CAP provider, to a modern core banking platform like Escalate, like other place. So there are ways to basically to remedy that, but definitely completely that's a bottleneck on innovation and product. You're just not able to move.
Yeah, I fully agree with that. Sorry to interrupt, Guy, but I think to Diana's point, and something that was touched upon as well by Benoit, I've seen the buy versus build strategic choice evolve a lot over the past 5 years. I think like probably 5 years ago, it was a very binary choice where I was meeting people that were like, okay, I'm going to build the whole thing end to end, and I'm going to hire whatever that means to get there, or I will outsource. And by outsourcing, it means the process, it means the technology, it means the people, it means the regulation. So more or less a BaaS offering. So I will be an agent of a BaaS. The only thing I'm going to do is a couple of front ends as well as marketing. And the rest of it, I don't want to hear about it. I think fast forward 5 years from it, the hybrid choice between buy and versus buy is more common. People are more in a buy and build kind of choice, or in a best of breed kind of approach, where they go about saying, okay, what is really my métier? Where do I matter? What is my value added as a bank, as a fintech, whatever that may be? And where do I want to employ my resources for my value added to be the higher? And therefore, what other bricks? I see a nice red brick behind Diana. What are the bricks that I should be shopping in the market, and orchestrate them in order to have a profitable growth as well as a top end customer experience. And I think that shift in a mindset is really happening, because in a way, that's what I was saying to customers, like, okay, guys, do you want to internalize processing issuing? Okay, do you want to buy some plastic in order to manufacture the card in your backyard? No, we are not going to do that, obviously. Okay, so if you understand you are not going to manufacture the card yourself, the software piece of it, logically, intellectually, is exactly the same logic. So I think a lot of C-levels have evolved towards the buy versus build kind of thesis, towards a more hybrid model, combining in-house assets, market assets, depending on the context. I think that's a huge trend that we see at least across Europe.
Great, thanks for sharing. And on that topic of trends, it would be great to hear from you, Benoit, and the trends that you're seeing from business leaders who are keen to move away from legacy technologies. What would you say is most important to those leaders as they embark on changing technologies?
Yes, for me, one good example is Stream. So it is BNP Paribas and BPC that have created Stream to become a major European player in payment processing, and they have a mixed approach. So it is what Martin explained. So just before, it just to try to leverage their own assets, technical technological assets and to improve the quality of the solution by have another buy strategy just to be sure that they have a state-of-the-art solution and to modernize their entire information system. So it's the main trend that I saw. It is a good example because French banks, we very often oppose the French banks to neobanks, and we see that here in this example they try to improve their own solution. So it is a way to modernize the whole payment platform from the French banks.
Great. And Diana, what trends are you seeing in your conversations?
Yeah, no, like definitely agree. Obviously, like speed to market is number one. I want to have it done for next week. So it makes sense. Like if you don't have that knowledge in house, then you need to go for ecosystem of partners that actually can do this for this in, weeks, months instead of years, as if you were going to do it in house. Obviously the kind of cost structure is one of those, and it is very true what Martin said: build versus outsource. Like you can see a lot more hybrid model, but because a lot of the kind of old players were just not modular enough to offer that, and so basically you have to buy everything rather than kind of cherry picking which services they make sense for you, and maybe some of them you want to grow in house, and maybe once you ramp, that's something that you want to do later on. And then obviously Benoit has touched on this, like keeping up with the regulations. It's obviously something that you have to do. In some cases, it can offer a way to innovate, or a way to force players to innovate and level the market. But yeah, basically, I would say speed to market, number one, then the partner ecosystem, and the cost as well that you need to factor in when you're doing these changes.
Great, thank you. And just shifting gears slightly to look at the technological aspects. Martin, over to you. What would you say are the key technological shifts enabling the modernization of payment infrastructures at the minute?
Yeah, I think the first one is really driven by the necessity to be able to combine best of breed services and orchestrate them as a top product together. And that is really the API first architecture. So that's, it can sound a bit as a marketing word. Okay, API, everybody is saying that. Okay, but like real API, well-designed, documented, that enable fast and secure integrations between SaaS providers is really, really a game changer. Because this is really what drives the modularity, not only within a brand or a product, but between brands and products. This is how companies like Scalit, Marqeta, or Comply Advantage on the AML side are able to collaborate very closely, because connecting those systems together is now a matter of weeks or months, instead of a matter of years, and you do it once and you have to redo the whole thing, whatever you change 2 years down the line. So to me, the API connectivity thing is really the top of mind aspect. The second aspect is really the real-time thing. And again, a lot of people are saying we are real-time, blah, blah, blah. Okay, real-time means instant event-driven architecture where whenever you do something, it's impacted everywhere else, from an accounting standpoint, from a payment standpoint, from a customer account standpoint. And that's huge, because if you try to have payment infrastructure that are supposed to be real-time to coexist with banking technologies that are not, then you end up with the mess that we see with the bank's IT to integrate the instant payment regulation across Europe in the SEPA zone. So we're not talking about cards here, but it's the same logic. Trying to connect together a real-time machine with an asynchronous IT architecture is almost a conceptual impossibility. And I think having a constellation of SaaS-based, API-driven real-time software is really game changer because it facilitates really like the stitching between the whole thing in order to drive faster and better customer experience. That's my view.
Thank you. How about you, Benoit?
Yes, I agree with Martin, of course. I think that there are three magical words: so cloud, API, and microservices. So I'm going not to deep dive in API because I think that everything has already been said by Martin. But about cloud, I think that it is very interesting to explain what are the main advantages. So we have several features related to the clouds. So the first one is elasticity. So it is a technical term, but just to explain that it allows to allocate additional resources to an application close to saturation within the physical limits of the platform, of course. But if the platform has large amounts of unused power resources, additional capacity can be allocated quickly. So it is very useful for the resilience, of course, of the global solution. We have also what we call location abstraction. So it is the application is somewhere on one of the machines that make up the virtualization platform. Sorry for the technical aspect of this word, but if the platform use replication mechanisms on remote data center, the risk of disaster are covered by multi-site distribution. So it is another way to secure resilience also. And of course, there are more financial aspects. So, for example, resources mutualization. So virtualization enables the resources of a single machine to be allocated to several applications. And you have also an approach that I call pay as you go. So a user pay for the resources they use according to their actual and precise consumption. So it is a big difference with on-premise solution. And we have also self-service approach. So it means that the development team can request the allocation of resources through a web portal, and these resources will be made available a few minutes later. So it is very, very useful. Maybe a few words on microservices. It is just, I think that for the new stakeholder, microservices architecture related directly to the API, of course, is a type of application architecture in which the application is developed as a set of services, so related directly to API, of course. And each microservice is a unique service designed to host an application feature and manage a discrete task. And of course, each microservice communicates with other services. This approach has several potential advantages. So the first is improve scalability. Second one, increase agility, of course, improve resilience, as I already explained it. And of course, a way to have a technological diversity, because the flexibility of microservice allows team to use the technology best suited to each service. So you can have some specificities for this.
Thank you, Benoit. And Diana, are there any technological shifts you're coming across with Marketo customers?
Yeah, I guess the one I would like to zero in could be about the platform driven and platform events. So you really see instance processing, real-time settlement, pretty much everything. And there are very palpable benefits to that. So for instance, you get real-time webhook of everything that's going on. You can send that as real-time notifications to your cardholder. You can have dynamic spending controls, if you're adjusting on your ledger as well. You can use a lot of behavioral biometrics for your own fraud. You can even do like a kind of almost real-time transaction matching between the clearing and the authorization, which it's very interesting. And just a little bit on what Benoit said, we've come from a model that was more based on databases to a kind of a data ecosystem, cloud system, cloud native cloud, even like multi-cloud. So there are a lot of benefits and real-time analytics and how you can use this for your marketing, for your downstream reporting, for your customers. And that goes kind of hand in hand with AI and machine learning models and basically the trend word for the year that I think all the companies are really working on not to lose their competitive advantage.
Thank you. And back to you, Martin, if that's okay. I'd love to know if there's any examples of banks or fintechs that you've seen successfully transition from legacy systems, and if so, what their results then were.
Yes, so we've been. I can give you a couple of examples. We've been helping back in 2018 and running the business since then. La Banque Postale to migrate their technical infrastructure from a legacy provider to a modern one, which is us. For them to scale their bank as a service offering. So we are exactly in the type of use cases I mentioned earlier. You are a big bank. You have a lot of things going on. You want to diversify your activity, to have a product factory internally, as well as the ability to serve external customers. For instance, Yavin, which is a high growth acquisition business focused on restaurants and hotels across Europe. So we've been helping them to do that. So we migrated their historical provider to ours. And since then, they've been able to achieve very interesting outcomes that are along the lines of what Benoit mentioned earlier. And the key outcome is really their ability to manufacture products, whether they are cards-related products or payment-related products, almost on the fly. So when we talk about time to market, I think that's important. We usually think about the time to market to launch the business unit and or to migrate it in this case, but rarely about the ability down the line to ship new products based on the same platform. And to me, that's almost as important. Your ability to remain agile in the market and have business people in a no-code approach to really like manufacture and ship instantly new products to the market is extremely important. And in this case, what our user research shows is that the time to ship a new product end-to-end at La Banque Postale with the bank as a service offering has dropped 5 times using modern services. So time to market to get started, but also, again, time to market for new products and ability to ship those products very quickly without spending too much money or mobilizing some IT guys somewhere. So I think that's an interesting example. We are also in the process of migrating an entire bank. So it's a small size bank with 150,000 customers with an obsolete system end to end. All of the activities are running on really an antiquated system that is not meeting customer expectation, that is too costly, too risky, not compliant regulatory-wise, everything that Benoit said earlier. And so we are transitioning the whole thing brick by brick from legacy to modernity. And what is really interesting is, again, what the user research shows. So here it's prospective. We are going to be live later this year. We are going to be able to automate almost 50% of the tasks between the historical system and the new system, which means also that changing technology is not only a technological project. I think that's very important to have that in mind. It's a change management project and a technological transformation that doesn't embark a lot of stakeholders with a desire to change processes as well as the product offering, as well as the end customer experience, is a failed technological transformation. So I think the tech for business kind of DNA and mindset is super, super important, and really using modern technologies as a backbone for more of a global transformation is something that I like to put forward, because I think we see the end of pure technological projects in the financial services space. Nobody wants to do pure technological projects that are somehow internal. Less and less people are interested in doing that. I think everybody wants business outcomes in terms of cost, in terms of experience, in terms of growth, in terms of revenue peak, whatever that is. And we need to all fall into that direction.
Great, very powerful examples. Thank you. How about you, Diana? Any insights?
Yeah, and that really resonates, by the way. But we do have a number of customers, I think the same as with Escalit. They come to us from a legacy processor. For instance, Klarna, they had part of the portfolio in Europe with another processor, and basically top of the list, it was downtime and speed to market. So this is not a problem with us anymore. Obviously, we contractually commit to KPIs. So the platform is scalable, is reliable, and they have a sandbox. They have basically all the tools so they can innovate on their own and launch products very quickly. And I think Martin has touched on something that is very important here, that normally when you're going from the, one legacy provider and you have basically a healthy portfolio of customers, you're going to be involved in a data migration. So you don't have to do a processing migration to basically make sure that customers that are not impacted by this, it's kind of invisible to them and it's just BAU. Which is obviously quite tricky with legacy providers because they don't have all the data. They have kind of clunky system, and sometimes they may not even be that cooperative because their customer is leaving. So very interesting examples, but again, a successful example as well of companies moving from that old model and being able to bring all the customer portfolio, no attrition with them.
Great. And Benoit, how about you?
I think that I'm going to skip my turn for this because it is still pending with my own experience. So if I take again the example of eStream, it's just a way for the French banks to change their relationship between their processor and their own system through the implementation of API. So it is just a way to improve the global solution, but it is still pending. So I have no feedback yet. It's just a job that is ongoing.
Great. Okay. Thank you. No problem. And then moving on to looking at partnerships. Martin, I'd love to hear your perspective on how partnerships between fintechs, banks, and tech providers like Marqeta and Scalit can accelerate modernization.
Yes, so I think there are two parts in your question. The first one is probably the relationship between banks and ecosystem of software tech providers, which is that I think banks have understood the necessity to think a bit more creatively in terms of who they want to work with regards to their technological assets. I think historically that was pretty much of a closed garden game where you basically had hundreds of people in IT dealing with 2 or 3 massive end-to-end providers, combining like thousands of Mondays of professional services with legacy assets, which is fine to do a lot of things. But to the use cases we mentioned, modernizing small subsidiaries, like being more agile to ship new products or start new activities, I think the C-levels within banks realize the necessity to diversify their suppliers from a technological standpoint. And I think understood that the next-gen technology is going to come from rising companies that are leveraging modern technologies as well as new ways of working from a software organization standpoint with different go-to-market, with things inspired also by their biggest enemies, Revolut and 26 and the like. And that in a way partnering, i.e. buying services from those tech companies was probably the way to go, not for everything, but for part of what they need. So I think that's the first part of your question. I see more and more from my standpoint, because we have more and more institutional customers, the desire to have new providers from a tech standpoint, that can be Marqeta, Scalit, and the like, in order to change a bit the game from a technological standpoint. The second aspect in your question is that indeed, when you replace or if you choose not to use and or replace a monolithic offering by an orchestration of best of breed services, but you change one thing by X. That's the reality. Because historically, when you were buying from the big old guys, put it this way, probably a bit aggressive, but they will forgive me, it was fully integrated. Okay, services-wise, card-wise, processing-wise, AML, core banking, front-end, all together in a way. So then you start unbundling that, and you say, okay, I will compose something that makes sense, combining my assets with best-of-breed solutions. And so you reaggregate in a way the value chain that makes sense in your world. And in order to do that, you need to leverage on different companies that are specialized in their own services. So you have Marqeta as a card as a service provider, you will have Scalit as a next-gen core banking provider, you will have Compliance Advantage as an anti-money laundering provider from a software standpoint. And then you get to the next question, which is, okay, so then I'm trading a complexity for another. So I have a pain point with the monolithic thing I had. It doesn't really work as I want for the use case I have. But now I'm switching that technological complexity for an orchestration complexity, because I need to make all of those guys work together. Okay, and that's a job. It's not that easy to do. Okay, because there are interconnectivity. You need to have several contracts. You need to make sure that it works. You need to be able to combine that within 6 months for it to work, and then you need to maintain the whole thing. And I think that's where the partnerships between us as tech companies brings a tremendous value to banks and other fintechs that are our customers, because we go about, in a way, rebundling a set of bricks in order to abstract away from the customers as much as we can the orchestration challenges by building pre-built connectors, by building relationship between us as sales guys, CEOs, solution guys, engineers, product guys, and so that we collaborate hand in hand. And because we do that, we are stronger as an ecosystem to help the customers achieve their goals and outcomes in the time to market they like, with confidence. And I think this word of confidence is extremely important, is that short time to market on paper has been pitched by a lot of people, but then you need to look at the reality of time to market. Like, what does it take to really be able to launch a digital bank in 6 or 9 months? It's not that easy. It requires several providers to work hand in hand with something that has been done before. And therefore, the strength of relationships and partnerships between tech companies like ours, in my opinion, is a key success factor to help both transformation and de novo launch.
Great. That's very interesting. Thank you, Martin. I see we have about 15 minutes left, and I know we've got lots of important topics to cover. So let's move on to embedded finance. And Benoit, this question I'll pass to you first, please. What role would you say embedded finance plays in the future of payments, and how can institutions like banks, for instance, leverage this?
Yeah, maybe first of all, I would like to propose a definition of embedded finance, just to be sure that we are completely aligned. So embedded finance is a concept of integrating financial services into non-financial platform, enabling users to access these services in a seamless and integrated way. So, of course, this model is playing an increasingly important role in the future of payments, and offer a number of opportunities for banks and institutions. So I can share here a few key points. So, of course, the first one is enhanced user experience, because integrated finance delivers a smoother, more consistent user experience. We have also increased revenues because companies can generate additional revenues by offering integrated financial services. We have also a better access to new markets because non-financial companies can attract new customers and penetrate new markets. It also enables financial institutions to reach customers who do not traditionally use their services. And of course, as it was already said by Martin and Diana, there is innovation and differentiation because the integrated finance enables companies to differentiate themselves from their competitors by offering innovation services. And of course, maybe it is something that it's just a trend today, but it is the use of payment data because companies can use data generated by integrated financial services to better understand their customer behaviors and needs, which can lead to the development of new products and services. And it is related also to the time to market because if you know better your customer, of course, you can manage better development of new products and services.
Great. And Diana, how about you?
Yeah, I think embedded finance is just gonna grow more and more, and we see already that it's kind of invisible finance. So you have for instance, in Uber, you almost don't realize that you're paying. We have the use case of insurance companies that they can send QR code, and basically you click on it. And that's your card. It's already populating all the details for the payment. So it's obviously from the user perspective, it's amazing. It's a completely frictionless experience. It's interesting as well that I think it kind of uncovers some new revenue models. So even if you don't work in payments, you can monetize it. And then obviously if you have a good ecosystem of players that bring kind of best strength to the table, you don't have to build from scratch. You don't have to manufacture the card yourself. You don't have to invent processing because they're already doing it for you. So I see a lot of companies that they focus on what they're really good at, on that product, and then they partner with best on breed, and they can provide this seamless, invisible experience to their users. And I just see this trend growing.
Great. Okay, thank you. And then diving into security and compliance, which is obviously a very important topic for all financial institutions. Martin, what's your experience with how modern payment platforms are ensuring security and compliance with increasing regulatory demands whilst enabling faster innovation?
Yeah, I think, look, the regulation obviously is at the same time, I think was a bit more easygoing is probably not the right word, but the ability for, as part of DSP2 in particular, historically, the ability for non-banks to actually exist in the financial services space, in a way, is opening perspective, and therefore you have to lower the bar from a regulatory standpoint because you enable people who have nothing to do with the financial services space in some ways to actually either build or at a minimum distribute financial services products. So in a way, when you do that, you unleash a lot of innovation and you unleash a lot of increased competitive intensity in the best interest of end customers, but necessarily you also increase the level of risk, at least on paper, because you facilitate the emergence of new players and new usage, and therefore it comes with a risk. And I think what we see now in the context of DORA in particular, and the scrutiny that is growing from a customer standpoint, and the chain of responsibility that is tightening, is a bit of the second wave that comes after what I've just said, which was a bit of an opening in terms of, okay, we can enable other people to do financial services, to be in the financial services space. And now we are a bit in the second wave, which is to secure a bit more that ecosystem. And therefore, providing what I see in the first place as guidelines with regards to DORA, it's going to be more enforcing going forward, but at least to say, okay, things need to be in order. There is a constellation of providers from a retail standpoint, from a B2B standpoint, from a B2B standpoint, and that needs to be under control. That needs to be under control from a cybersecurity standpoint. That needs to be under control from a data regulation standpoint. And on top of that, that needs to be under control from a sovereignty standpoint, which I see as a flavor of the regulatory piece. And we see more and more discussions around that as part of RFPs in particular. I think 2 years ago, nobody really cared about US-based services, etc. Now it becomes really a top-of-mind question with regards to EU, let's say, sovereignty. And therefore, the service providers that we are need also to adapt what they do with regards to the change in the geopolitical context in order to fulfill the demands that comes from CIOs as well as CEOs. So that's what I see mostly, and that comes at a cost.
Yeah, makes sense. And Benoit, would be great to get your perspective there.
Yes, according to me, ensuring system security and compliance, of course, is essential and perfectly compatible with faster innovation. So I can share some key takeaways. So the first is to have a by design approach. So it is critical to involve security and compliance team from the start of project to integrate regulatory or normative requirements. And you have also to educate your R&D project and business team to better identify risk and align solution with standards and requirements. Of course, you can be supported by innovative and secure third-party partners. You can collaborate with providers adhering to high standard to facilitate the operate integration of security and compliance measures. And you can use also innovative security and compliance tools. It is a way to accelerate the integration of requirements, automated control, and strengthen the fight against financial crime while maintaining human oversight at the same time. So we have a lot of examples. So according to me, it is the four main features to be compatible with faster innovation, even if we have a lot of work to be compliant.
Makes sense. Thank you. How about you, Diana?
Well, yeah, I guess just to add that there are a lot of companies that, like we do ourselves, like we offer kind of compliance as a service capability. So we were talking before on your transport provider, you're a gig economy provider. You don't want to focus too much on PSD2 reporting and all the kind of regulatory boxes that you need to tick. You want somebody to provide a lot of this for you and not have to build it from scratch. So obviously it's very important and you want to remain competitive, but you can get a lot of your partners to do these things for you. And the data localization point Martin mentioned is an interesting one, because I agree with you, but at the same time, unless the pan-European system initiative goes ahead, Visa and MasterCard are American companies, so we also need to be pragmatic in that.
Yes.
Okay, there is. The personal data needs to be safe and need to be able to override it. If I get a request from my customer, I need to understand what it is, and I need to limit probably how much data I'm sharing with my partner, unless they need it for the services. I don't have to, so I think we need to be. It's definitely a valid concern, although I would say probably there are more political changes than ecosystem change.
Well, I agree with that.
But
Totally.
Yeah, but yeah, I think it's an important point. They didn't take it into account before 5 years ago, like maybe like environmental responsibility, and now it's part of all RFPs. Yeah.
Anything you want to add there, Martin? I can see you agreeing.
No, I think when I look back at the title of our discussion, I think if I think about the term like old rails, new rules, what I see that is extremely interesting in our space is that, in fact, all of the layers are moving, if you think about it. So on old rails, new rules are built. So if you take like the Visa, MasterCard rails, we are all working together to cope with customer expectations and really transform the value chain at the top level and abstract the complexity of what's underneath to leverage the same rails to provide enhanced services both to our customers and themselves to their customers again. But I think the rails themselves are changing, modernizing, diversifying. When I see what Visa and MasterCard are doing, they are diversifying also their understanding of rails beyond cards in a way. New rails are being created. When you think about the stable coins or the crypto related topics, very simply at a high level, it's about manufacturing new rails for payments. When you think about the instant payment with regards to SEPA and SCP Inst in particular, it's about also adding new ways. And so I think things are moving at the top in terms of the new rules, but also at the bottom with new rails being added in parallel of the old rails. And I think for all of us, it's very exciting to be part of such a transformative time frame with so much going on in the interest of the end customers.
Thanks a lot. Thank you, Martin. I see we have only a few minutes left, so I will pass to you all for any closing thoughts or anything you didn't get to cover that you want to include as we wrap up. And I'll start with you, Benoit, if that's okay.
Maybe just to explain how the payment landscape evolve and how should organization do know to stay competitive. So I think that the first step is to embrace emerging technology. So according to me, of course, we have instant payment, so real-time payment system will continue to develop and offering consumer and business faster, more efficient transaction. We're always a good example. We have also blockchain and cryptocurrency. It is something that Martin explained also. So also their widespread adoption remains uncertain. Blockchain-based technology could play a growing role in payment system, particularly to cross-border transaction, I think. Of course, as it was said by Diana, artificial intelligence and machine learning is a big topic also. This technology will be used to improve fraud detection, personalized financial service, and automate payment processes. And second point is to improve the customer experience with high personalization of the consumer expectation, and also seamless integration and optionality. Payment solution will need to integrate seamlessly into the customer shopping experience, whether online or in store. So it is also a matter of omnichannelity.
Great. And Diana, how about you?
Yeah, I guess from my side, we kind of come back at the beginning of this conversation. The market is evolving so quickly. You have new trends, you have social media. Teenagers now believe that, Amazon is their bank or TikTok. You have super apps where you can do everything. And either you keep up with the trends or you start losing customers. You start basically getting out of the market. So it's something that must be done. Of course, don't want to be dogmatic how to do it, but obviously, rather than rewrite everything, like I said, kind of picking up some services and go with the best on breed collaboration partner makes sense. Having a layer of modern APIs on top, it's something that makes sense. And this is what I basically discuss with prospects and with customers every day. So it's a very interesting evolving landscape, and basically you need to be able to keep up with it.
Great. And Martin, any final remarks from your side?
No, I think we are all here on that table enablers of technological enablers of those transformations. We touched upon embedded finance earlier, which is in a way the end game of having financial services to be closer from end customers and closer to the underlying demand with regards to consumption of products or services. And I think we just make that possible by trying to simplify to the best of our capacity an industry that is everything but not simple, everything but simple. So I think if there is one thing that we do at Scalit or at Marketa, is to abstract away from our customers the more complexity that we can, for them to provide the best services as possible to consumers when and how they need it. I think that's really the key high level view. How do we simplify an industry that is nothing but simple?
Perfect. Well, thank you. I know we are just over time, so thank you three for joining us today and sharing your insights. That was really useful for my own benefit, and I'm sure everyone who's watching feels the same. So thank you very much for joining, and thank you for everyone watching for joining us today. We really appreciate it. Have a great day.
Thank you very much.
Thank you very much.
Take care.
Bye-bye.
Thank you. Bye-bye.